Market economist from Rockwell Global Capital is on the phone to talk about the markets before the holiday. Peter, good afternoon to you.
Good afternoon to you.
The last few days, how would you characterize this sort of Santa Claus rally?
Well, it's been an exciting year, and certainly, the past few days we've seen both the Dow and the S&P reach new record highs. Dow 18,000 plus now. Obviously, it continues to run up on good fundamentals, and it's all about the fundamentals, not only the stock market fundamentals, but the economy's fundamentals. And, of course, they go hand in hand. And so we're looking at an economy that's expanding. It's been quite an exciting year for the economy at that. It looks as though we're probably going to see growth in 2014 around 3.25%, which was better than anticipated. And the key is that there is no inflation, and that the Fed is going to probably look to raise rates sometime in 2015, most likely in the second or third quarter of the new year.
I want to ask you, because you say the market's moving up on fundamentals, both the economic fundamentals and company fundamentals, but how much of the Fed is playing a role here in keeping interest rates low?
Well, I think, the Fed has made it clear that they're going to be patient. Now, if we continue to see growth like this that we saw in the third quarter spill into the fourth quarter and into the first quarter, then I think that patience is probably going to be tempered down somewhat, and we'll probably see rates move up a little sooner than anticipated. But the Fed obviously is concerned about what's happening in the global market, certainly what's happening in Russia, certainly what's happening in Euroland. And so as a result of that, because there is an absence of inflation, and of course, we have this extra dividend now of lower oil prices, the threat of inflation certainly is non-existing. And so they might be able to say, well, even if growth is averaging at 3 or 3.5%, we can wait, until June or perhaps July to begin to normalize rates.
We kept hearing all year about the strengthening dollar and how the greenback getting stronger was going to really impact the earnings of international companies. Is that what we found?
Not really. I mean, so far it hasn't. Now, if the greenback certainly were to get even stronger from these levels, let's say measured by the dollar index, move around towards that 95 par level, then that could be a problem. But, I think throughout the years, a lot of corporations have now, and obviously referring to the multinational corporations, have begun to fine-tune their hedges. And so the drastic consequences of an overly strong dollar, I think, is somewhat limited. That's not to say that it won't impact earnings of certain companies. Certainly it will. But I think on a less dramatic scale.
Peter, one final question. We have about 30 seconds. The collapse of oil prices, how is that going to long-term affect the equity markets over the next 6 months, do you think?
Well, I think if we don't go any lower and we begin, and I believe we're probably beginning to stabilize, if we hang around the $60, $70 level, I think it's a blessing from above. It helps corporations, it helps the bottom lines, and it certainly helps the consumer.
Okay, Peter Cardillo, thank you so much. Happy New Year.
Happy New Year to you.
And coming up, we are going to talk about oil and the impact it had on 2014. Stay with us.